What's up, guys? It's October 18th, 2023. Talk about the E-mini. It was a pretty tough day today. I had a rough day. I was red for most of the day, but I managed to finish green towards the end there. It was a bear channel, and like a continuation from yesterday's sell, really. Just kind of, we were in this broad bear channel, looks like, from yesterday. I'm not projecting these lines, I'm just trying to show the channel. So don't be like, oh, he fixed it. I did fix it, so you guys can see. So it was a spike in channel. And I had a hard time. This price action along with this uptrend yesterday, I think was quite tough. But nonetheless, it was a downtrend and a continuation. It was a broad bear channel because bulls were making money on every pullback. So yesterday's price action was an uptrend for about half the day. This was the weekly high. We popped above it and sold off. This creates a spike on a bigger time frame. And we range for the rest of the day because it was a big up and a big down, and we range. We didn't know it, but yesterday this was the start of today's channel. Oh, did that backwards. It's here. I don't actually use this channel tool. I always draw them myself. It's weird. So yeah, that was the start of the channel. Yesterday's price action can have some sort of continuation today. These are the first 6 bars of today. We have a small gap down, and bar 1 is a bull bar, but it's followed by a bear bar. So maybe bar 1 was a profit taking bar, and we don't really know, but I am thinking on bar 1, since it was just, we had a bull run and then bar 1, I was thinking bulls were going to get a continuation. I was looking to buy, bar 1 right here. I thought this was good for the bulls, and with a small gap down, bar 1, I was looking to buy on the line here, but yeah, bears got the rejection and started to make a double top. I was a bit hesitant because these were bull bars. They were dojis, these are range bars, but a gap down with a double top is a bear flag, and the latest price action was a rejection and a sell from yesterday. So bar 1's a bull bar, bar 2 is a rejection. This is a 2-bar reversal pattern. It's pretty credible for a short, but there was news today, so I was also hesitant about that. And yeah, let's go. Let's see the next 12 bars. About the next 12 bars, we have a push up into the EMA. This is bar 10, and bar 11 does show follow through, but there's a wick at resistance. This is the bigger time frame EMA, and this is the 5-minute. So yesterday we popped above it and we sold right back down below it, and then we ranged. Yesterday this was somewhat of support, and today it's acting as resistance, and the 5-minute EMA is also acting as resistance. So I think there are more sellers sitting at highs rather than buyers willing to buy highs. Here, buyers are buying highs, so we could say buyers are sitting here. But this wick, and obviously this bar, is clearly telling us sellers are in control today with a bear. You guys know the bear bar by now. So here, and then a expanding triangle almost. You guys can see that. That's the floor, the support. You guys see the bear flag now? It's a bear flag. Even though it looks wonky, it's the same forces. It's 1 push, 2 push, 1, 2, 3, 4, 5. And it broke down. So this is a triangle, that's 5 pushes. And we broke out of the morning range. I like to go for a measured move after the morning range is broken. I'm trying to be more consistent with how I take profits, so I hope you guys start to see this a lot more, because I will be looking for a breakout and going for 2R. As long as it makes sense and we're not like shorting lows. So this would be my target today. and the target does get met, but I did not hold because this got real wonky. If you traded the E-mini, you made money. Good job today. I scraped by with a little bit of greens, but nothing crazy. Here we have a double bottom on support. How do we know it's support? Because machines do measured moves, so they see this as profit taking. This is 1R of the measured move. So it's natural to take some profits here and maybe profits here if you guys are managing trades. I don't talk about managing trades too much because I want to focus on price action, but it's important for traders to understand entering a trade is not trading. It's how you manage that trade what matters. You can do anything you want. You can buy, you can sell, depending on your account size and how much you can take. How much can you take? If you bought this bar, and your account could take a 20-point stop, you could just buy here, buy here. Your average is gonna drop to around here. Actually, I will tell you exactly where your average is gonna drop. Okay, so we're gonna say bulls buy the high of bar 11. And then they have to buy more to get out a break even. So they're gonna buy right here because market order, maybe whatever. They have to get to the 50% level. Maybe they buy, if this is just buying if you buy one contract here and one contract here, this is the price. But if we were to break this section into thirds, this is getting a little crazy. No, it won't work. I'd have to change the fib retracement, so this was broken into thirds. We're just gonna eyeball it. Pretend this is even thirds. I know this is not, but just pretend like 1, 2, 3. You could buy 2 contracts, and then your price would be like the third line. Right now, our price is like if we buy here and we buy here, our average is this middle line. This is our average. So if we bought 2 or 3 contracts, our average would be a lot lower, and we'd be able to get out. And that's dependent on your account size. So back to the trade management, it's about trade management and what you can do and how you can handle. How good can you read price action under pressure, which I think is awesome because no indicator is going to help you do that. That's why I like price action, and that's why it's important to understand what matters is reading the markets correctly, trading small to keep your emotions in control, which that's a big red flag for me. I size up when I'm doing good or when I'm doing really bad. I'm working on it. So yeah, back to the price action. But managing trades over entries. That's what I was trying to get at. I deleted the measured move. It was here to here, I think. That was the red line. Yep. Okay. This is very tough price action. This is where I pretty much lost all my gains. But this is also something interesting. Actually, I'm going to pause it here and talk about this pattern. This is important. We had a Fed speaker here, and I was just not wary of it. So the Fed speaker was at 9. So maybe the market consolidates until then, but I was just not cognizant of the Fed speaker today. And look, I got chopped up. But what's interesting is I told myself I enter the markets, I entered on this breakout, and I put my stop either here or where it makes sense. But I saw this double bottom, and I abandoned ship, and I hit out and started getting chopped up. And I saw this rejection. I was like, why did I let go of my position? So I get back in, I get completely chopped up. And what I want to say is this is barbed wire, and like barbed wire is bad. Al Brook says new traders should just avoid barbed wire and to be cognizant of Fed speakers and don't do what I did. I just said, because since I don't pay attention to the news numbers, I somewhat just I'm like whatever. I only know when like Powell and them speak. Excuse me. But now I'm paying a little bit more attention to like Harker or whatever his name was. So yeah, the market, this was a news bar-ish around this time frame, and we were consolidating, and this is just bad. So be cognizant of this type of price action. It's not good for us. If you got experience and you know how to trade that, you just set your limit orders, you scalp out, you are good to go. You probably love this. limit order traders just set limit orders and they just scalp out, add, scalp, whatever they want to do. Limit order traders make a lot of money. I've tried to limit order trade, but it is challenging. Definitely encourage everyone to limit order trade in sim, so you can get the feel for how it feels to be filled when the market's moving against you, because it kind of creates a different understanding. Like if you have a order set here at the EMA and this bar rips against you, do you hit out or do you trust that this bear leg's gonna get continuation? Because this bar's pretty menacing to get filled on a short order, like at the EMA. Even though I say right here because there's another wick here and there's an EMA, so I think it's likely we test around here. But would you hold if you got filled? That's one of my problems, is sometimes I get filled on candles like this and I hit out and the exact thing I was talking about, it just sells in my favor and then I end up getting back in here. So whereas my original position only took about a couple points of heat, but it was the way I got filled that freaked me out. So it'd be good to just practice limit order trading in sim if you're ready for it. If you guys are profitable with your stop order entries, don't do anything to switch that up. Just do what you're doing. But limit order trading is interesting. I do want to do it one day so I can make bank in this environment and in this environment. Back to the price action. Bulls are still rejecting. Bears are still rejecting above the EMA. The first hour kind of told us that we're getting rejections above the EMA. And here it is again. First pop sold, second pop sells. We're starting to create some sort of bottom here in terms of a wedge bottom, not a very good bottom, but something's going on here. The bulls are starting to buy more. If they bought this bottom and they don't scalp out, they can buy more here and get out. Just as the same exercise we did earlier, that happens across all time frames, that's how the market moves, but that's another story. That's another whole break-even trading is very difficult and dangerous. Boom. Very close to hitting the PT. The 2R PT would have been met. And that wedge, the wedge where I was like, it's looking kind of like a wedge here. It worked. They came, taps. They didn't really get to the 2R, but we came right into this range. And we ripped up. This could have been another speaker as well. And right here, another sell. The markets are selling again. That's the third pop. So one. This tells us what's going on. The bear flag. Selling above the EMA. Sell above the EMA. This is also a hard sell. I didn't take this, but I saw it. But yeah, selling above the EMA again works, and they get a double bottom. If you were to take this sell, this would be your PT. You could take half off here, and then take the other half off. Excuse me. You short here, you take half off here, stop to 1 point here or here, and you take the rest off here, because this could just bounce like that. We really don't know this is gonna happen, but it happened. So double bottom for the bulls on support. Remember, profit taking. I think the reason this didn't reach here is because people were seeing how much buying was going on, and they were just so ready to hit out. It failed by 1 point. I'm going to speed this one up a little bit because I have to do a few things. But we can see here, again, a pop above the EMA, sold. And this time this is a pretty good sell. This is a tight bear channel. Double bottom did fail, but bulls made money. So we know we're range bound, and then we're breaking out of a range here. The floor would be about here. I don't know if this move got met, but let's go bear bar to bear bar. Or you could do like, that's a little off. You could do it like this leg, or you could do it from here. A little more conservative, like that. From this leg to this leg. Let's see though if it gets hit. I was out the markets after this maneuver, I was done. I was like, yep, today is just not that day for me. Bang, look at that. These targets are very close to getting met. They're not absolute. Measured moves are just meant to keep us in the correct direction. It says it in reading price charts bar by bar. It's Al's newest book. He talks about measured moves and how they should be used as a guide to not take counter trend trades for new traders. He always preaches new traders should not take counter trend trades, and I kind of gave that lip service when I first heard it. I was like, yeah, I'll be fine. But now I'm starting to put a little more things together. Taking a counter trend trade is truly quite difficult because the idea would be to take the counter trend trade and then get back into the main trade. If you want to take a counter trend trade and not get back into the main trend, that's just whatever to me. But the idea of a counter trend trade would be something like, a counter trend trade to me would be short here, long here, short here, but you're catching these, you're not waiting for confirmation, because if you weren't long here, you most likely would see this here. You know what I'm saying? You would be more ready for it. So that's counter trend, and then it's getting out here, taking this here, and then selling off all the way low again. Just finished. Oh. Bulls get a strong leg up. And we close on the EMA for the day. The measured move is not met. This measured move does get met if you hold. I personally, I'd get stopped out here. But if your stop was where it's supposed to be, 2R is met. So that's good to know. 2R is met and then some if you have a runner. We're still selling off from rejecting off last week's high. Yesterday we had the reversal right at the high and we sold off. This is the after hours bar. I'm doing this a little bit later in the day. So bears are getting a lower high double top and they're closing below the 50% of the last week's range. That's not good for the bulls. They want to keep the 50% level. They'd want the bar to close above the 50% level is what I was trying to say. Since bears got this close below the 50% level, I'm just gonna eyeball it. About there, that's 50%. Since they got this close below the 50%, they're gonna shoot for this last week's low. That's their target right now, and if they break through, I think they're gonna go for the October 4th low. Or maybe we bounce and then bulls try and get a close above the 50%. It's hard to say, but right now, bears, this is good for the bears to close below the 50% of last week's range. That's pretty bearish for them. Lower high, double top, strong pull. Who knows? Or maybe this is becoming a wedge bottom bull flag and it's going to trap the bears and we shoot up. Because this is bearish, but this is bullish. So what is the market looking at? We won't know until it happens. So that's where we are on the daily time frame. Not too exciting. Today's sell was pretty tough. And hourly is just a little more granular. Nice. The 50% stayed. It looks like bulls tried 3 times to break out. 1, 2, 3. So maybe we do actually go lower now and bears get their 3 tries. Pretty tight range. Maybe we could come back up because we've been in this range since the 9th. So about 9 days now we've been within this range. Maybe we have to come back up and test the 50% level of this range. It's hard to say what happens, but from a price action perspective, this is a triple top. It closed below the 50% level. They want to sell. They want to tag here and tag and keep going. Bulls obviously want to reject. Bulls want to reverse the bears and take the market higher. But yeah, I hope you guys are studying. Hope the breakdowns are helping. Turn on your notifications. These drop every day at 3 p.m. Pacific Standard Time. Drop some comments on the type of trades you guys are taking. You don't have to trade the E-mini. Price action works everywhere. A few of you are in the trade room, so I appreciate you guys showing some love in the comments. Thank you so much. I really do appreciate that. I read them all. working. I'm still studying price action so we can all get better together. Keep studying, use your stop loss, or don't. No, I'm joking. Use your stop loss. All right, have a good night, guys. I'll talk to you tomorrow. Bye.